Hi, and welcome back to TNM TV News. I'm John Cumming, editor of The Northern Miner. In this segment, Mining Markets editor Alicia Hyatt catches up with Mercenary geologist Mickey Fulp at the Cambridge show in Toronto. Mickey talks about the burgeoning rare earth elements scene and which juniors to keep an eye on.
Mickey, it's a pleasure to have you back with us again. This time we're going to talk about the rare earth sector, a sector that you started covering in 2007. What piqued your interest about the sector all the way back then?
Well, it was a specific company, Avalon, and I've always been interested in the specialty metals, but there's not much opportunity for juniors in specialty metals sector. And so rare earths is one of the areas that not really conducive to major mining companies going in, and it became a niche market for me, starting first covered privately in June 2007 and then started covering publicly in 2008.
More recently, just in the last couple of months, the share prices of a lot of juniors that are in rare earths have kind of exploded again. What's happening right now?
Well, there's been two or three catalysts. The first was Chinese announced in June that they were going to further restrict export quotas and try to crack down on the black market for heavy rare earths in China and consolidate the existing industry, which is a bunch of small miners, into a number of larger groups. So that was one of the first catalysts. The second catalyst then became, because of that increase in prices. Prices have increased dramatically, 300% overall. Various metals have gone up higher or lower than that, but those price increases brought increased public awareness. And finally was the IPO on the New York Stock Exchange of Moly Corp, the gorilla on the block in the U.S., and that has led to increased public awareness in the U.S. and I think an influx of retail investor money into the sector, especially on companies listed in the U.S.
Moly Corp, the IPO was at $14. They're at close to 28 now. Did anyone expect that to happen?
I don't really think so as quickly as it did happen. The IPO was very poorly received. It was scheduled to be done at about $16 to $18 a share. It came in at less than 14, a little less than 14 a share. It immediately dropped in a couple of days, traded somewhere around the 30 to 40% of its entire share base, traded down to as low as $12 a share. Kind of muddled about for about a month, and then it started going up, and it has continued to rise, setting new highs almost on a daily basis now.
What are the fundamentals of the rare earth market? It's a small market, and the pricing is opaque.
Well, it's a very small market. It's 90% plus controlled and supplied worldwide by China. The market is very opaque. There is no open exchange. There is no world exchange prices. It's basically negotiated prices from suppliers to users. So it's very hard to know what prices really are, how the metals trade. But what we do know is there will be increased demand, and there is a limited supply coming only out of China right now, and a movement afoot to develop sources in other parts of the world, specifically North America.
So it seems that there would be a limited number of juniors that could actually benefit from this projected shortfall in rare earths then.
I think that's very true. There is some ideas that the first two or three companies into production will satisfy this even burgeoning demand projected at 10% a year. So of the multitude of juniors now listed on the Canadian exchanges, and I do know that it was 75 with exposure in January to rare earth elements. I picked of the original 75, 13 that I thought had a chance geologically were in the right geologic environment to perhaps have a deposit that could eventually make a mine. When I took share structure and the people end of that and looked at the valuations, I picked 4 or 5 companies and chose to cover those. So
Avalon Rare Metals is one of the companies that you cover, and they're one of the most advanced companies. They're aiming to be in production in 2015. What are the obstacles to that happening?
the obstacles they face are remote access and infrastructure where they're located in the Northwest Territories. They may eventually have some native issues, but they've done a very, very good job in addressing and including First Nations in the process. They are the leader by far in that. They are the most developed. They're at least 1 to 2 years ahead of any other company in heavy rare earth element space. And we need to separate heavies, rare earths, from light rare earth deposits, geologically very different and metal-wise very different. But there's no doubt that Avalon is the leader, and all of these plays have metallurgical challenges. The fatal flaw in all these will be potentially the metallurgy. Each deposit has to be evaluated on its own. They are all unique, and Avalon has made good progress on that.
Are there any other companies that you're following in the rare earth space?
I cover Quest Rare Minerals with their Strange Lake deposit in far northeastern Quebec. I cover Rare Element Resources. They have a light rare deposit in eastern Wyoming that looks robust, and it's an interesting company because it also has a gold play adjacent to it, so it could be a 2-for-1 spin out. What is interesting about Rare Element is they have the U.S. listing. There's only 2 companies, Molycorp and Rare Element, with U.S. listing, and those have performed better than any other companies on any Canadian or American. So you're attracting the retail American investor who's finally becoming aware publicly about this space. And finally, Tasman Metals, an interesting play because it's a European play. Their projects are in Scandinavia. The European Union and Western Europe has no supply right now and will have increased demand, and so this is a bit of a niche play because they have totally dominated the space for projects in Europe, specifically Scandinavia.
How does a retail investor distinguish between somebody that is a contender, as you said, and those that are just trading off the name?
Right. Well, I think you need to first look at it. All becomes share structure, people, and projects, and you and I have talked about this concept before. And then you want to find undervalue. Now, it's pretty hard to find undervalue in this space right now, but it really depends on number one, the project, and evaluating, is this a standalone rare earth element project, or is, as commonly in this, several of these companies have morphed from other commodities, and sometimes successfully. For instance, Quest was a uranium explorer, now is a rare earth element explorer. But you want to look at deposits that are standalone. Commonly, uranium deposits will have a little bit of rare earths with them, but it's a uranium deposit with some rare earth values. Commonly, niobium and tantalum deposits will have a little bit of rare earth with them, and vice versa. A rare earth element deposit will have niobium and tantalum, but you want to make sure they are actual rare earth, standalone rare earth deposits. So that's kind of the first key. You want to look geographically where they are. I am very adverse to geopolitical risk in this sector. There's companies with rare earth element deposits in parts of the world that I don't think are geopolitically possible to develop an economic mine, so stay away from those. It's a sector that has reached crazy valuations right now, so I very much urge the individual investor to tread cautiously in this sector.
Does that mean that there's a bubble?
Oh, it's no doubt a bubble. So in my opinion, it's a bubble that is just being blown up right now. It's got a long ways to go. I fully expect valuations to go higher. There will be corrections, there will be perturbations. As long as the world's economy continues to hum along, which rightly or wrongly it appears that the banksters have been able to take care of our problems and get economies percolating, if you will, again, that the sector should prosper.
Thanks for watching, and see you next time.